Paying bills. What could be more fun than that? Okay, maybe a few things come to mind. Nonetheless, bill payment is an important part of the day-to-day financial life of Canadians, their financial institutions, and businesses. Canadians made close to 450 million bill payments last year. That's a lot of bills. The vast majority of those bill payments involve transactions between two different financial institutions when the payor and the payee don't share the same FI. How are those payments exchanged between institutions across the country, across multiple time zones? How do the more than 130 different financial institutions across Canada keep track of the money they owe each other and each biller as a result of their customers' bill payments? It's a process called clearing, and that's where the Canadian Payments Association, CPA, and its bill payments framework comes into play. Financial institutions, or FIs, track and reconcile bill payments via the CPA's Automated Clearing and Settlement System, the ACSS. The payment file format used to exchange bill payments between FIs is Electronic Data Interchange, or EDI. EDI files are exchanged between financial institutions via the CPA Services Network, the CSN. The CSN is a highly secure and robust telecommunications network used to exchange electronic payments between financial institutions in Canada. In 2011, CPA systems cleared close to $1.5 trillion in paper and electronic bill payments. But bill payments aren't the only payments exchanged as EDI files. Corporate clients of financial institutions also rely on EDI to make corporate-to-corporate payments in Canadian dollars. In 2011, they used EDI to send approximately 2.5 million payments representing over $161 billion. Let's examine how the CPA's bill payments framework operates, how it uses EDI, how EDI payment items travel, and the rules and standards that govern the process. A payment made via the CPA's bill payments framework is referred to as a bill payment remittance. To create a bill payment remittance, financial institutions need two things. First, they need a remittance. This is the information that tells the customer's financial institution which biller the payment is for and which financial institution is collecting bill payments on behalf of that biller. This remittance can be paper-based or electronic. A paper-based remittance is the bottom detachable portion of an invoice, frequently called a bill stub, that a biller sends to its customers to request a payment. The number 96 is encoded on the remittance to identify the item as a bill payment during automated processing. Other information, required to direct the remittance to the billing organization's account at the biller's FI, is also encoded on the remittance in special magnetic ink. An electronic remittance is the same data provided by online or telephone banking systems. This electronic data is required by the customer's FI to direct the remittance to the biller's FI. The second thing a financial institution needs to create a bill payment remittance is a remittance amount. This is the payment that the customer provides to their financial institution from their own funds. Payments made at an automated bank machine or in person at a teller may generate paper-based remittance transactions. Payments initiated in an electronic environment, such as telephone and online bill payments, for example, will generate electronic remittance transactions. Once the customer's FI has the remittance and the associated remittance amount, it can initiate a remittance transaction. As soon as the customer's FI initiates the exchange of the paper-based or electronic remittance with the billing organization's FI, that paper or electronic item itself becomes a credit item. A remittance representing the value of the payment that was made to the customer's FI by the customer and must subsequently be applied to the account of the billing organization. Once the billing organization's FI updates the biller's account to reflect receipt of the remittance, the biller will update their own customer account records to reflect the amount of the customer's payment. Of course, if the billing organization receives its payments from its FI in EDI format and has fully integrated its accounting systems, this will be done via straight-through processing, meaning that customer accounts will be updated in a timely manner with no manual intervention. The type of remittance that a biller chooses to accept has implications for the FIs where the customers of the biller pay their bills. If the biller has chosen to accept both paper-based and electronic remittances, for example, the customer's FIs may enter either paper-based or electronic remittances into the clearing and may convert any paper-based remittances to electronic format prior to entering the items. If paper-based remittances are entered into the clearing by their customers' FIs, but the biller has requested that it receive all paid remittances in electronic format, it then becomes the responsibility of the corporate FIs to convert the paper-based remittance to electronic format for delivery to the biller. If a biller has chosen to receive paper remittances only, the paper remittances are not converted to an EDI file and are exchanged and cleared via the same process as checks. Take a look at the checks section in this series to learn more about this process. To create an efficient bill payment process for consumers, financial institutions, and billers, the CPA developed a unique numbering system called the Corporate Creditor Identification Number, or CCIN. A CCIN is a non-transferable identification number assigned by the CPA to businesses, governments, and other billers to facilitate the routing of bill payments to these organizations through their FIs. The CCIN, which appears at the bottom of bills and invoices, allows billers to be uniquely identified for the purpose of bill payment processing. Billers may obtain more than one CCIN, provided that each is used for a distinct category of bills. For example, an insurance company may use one CCIN for car insurance bills and obtain another CCIN to bill its clients for life insurance. The CPA maintains a database of all CCINs, which is updated weekly to reflect CCIN additions, modifications, and cancellations. This database is essential in increasing accuracy and efficiency in routing bill payments to their destinations. To obtain a CCIN, a business must apply through and sign a CCIN agreement with the CPA member financial institution that will act as their lead FI and collect bill payment remittances on behalf of the biller. If the biller's FI is an indirect clearer, meaning that it has arranged for an FI that is a direct clearer to make entries into the ACSS to track the payments it exchanges, then the biller must also sign an agreement with a direct clearer. To learn more about participation in the ACSS, you can check out the Intro to the CPA module in this series. By including the biller's FI in the CCIN application process, FIs maintain control of CCIN issuance and relationships with their billers. Application forms are available upon request from an FI. It is important to note that participation in the CCIN framework is not mandatory for corporates, and bill payments can be accomplished in many different ways. However, the CPA's bill payment mechanism offers corporates several advantages: timely receipt of funds and payment-related information, and the assurance that once a payment is deposited to their account, it is irrevocable. Once a CCIN has been issued to a biller, the direct clearer for the biller's FI must provide written notice of the new corporate creditor agreement to the designated contacts of all other direct clearers, who then notify all of their indirect clearers, financial institutions for whom they act as clearing agents. Each FI then has the opportunity to decide whether it is willing to accept remittances on behalf of that biller. The notification to other direct clearers must include the implementation date for the acceptance of bill payments for the new corporate creditor. The implementation date must be at least 30 days from the date of the notice. The notification must also include the acceptable media for the exchange of remittance data. Media means the type of inter-FI remittances the biller is willing to accept. They can choose to accept paper-based remittances, electronic remittances, or both. The biller's preference is then stored in the CCIN database. Each financial institution, as a business, can decide which payments they are willing to accept and which payment methods they offer to their customers. Direct clearers that receive notice of a new corporate creditor must indicate to the biller's FI whether they are willing to accept payment remittances for that biller. Indirect clears must indicate their willingness to accept payment remittances for that biller to their direct clearers. On the designated implementation date, acceptance of remittances begins. Let's take a look at the flow of a basic EDI corporate-to-corporate transaction. It's pretty straightforward. An EDI transaction's travels begin when the corporate payor, known as the originator, creates an EDI transaction file, with or without the related remittance information, and sends this electronic file to its FI. A corporate can submit EDI payment info to their FI in various ways, depending on the services offered by that FI. If the payments are not already formatted for EDI, the FI does the work of converting the payments into EDI files. Routing information in the payment files is compared against data in the CPA's financial institution file, the FIF. The FIF is an electronic database of routing information for deposit-taking institutions in Canada. The CPA maintains this file, and we update it every week to reflect additions and modifications submitted by our direct clearers. This validation ensures that the EDI files are routed accurately through the clearing. Once validated, the payment travels, with or without the related remittance information, over a secure network called the CPA Services Network, or CSN, to the payee's FI. The payee's FI completes the information flow by sending the transaction to the receiver, the billing organization. To exchange its own EDI payment items, a financial institution must be a direct clearer. Direct clearers are CPA members, other than the Bank of Canada, that exchange payment items and make their own entries into the CPA's Automated Clearing Settlement System, the ACSS. These entries track the volume and value of payment items the direct clearers exchange. Direct clearers that choose to send and/or receive their own EDI payment files are referred to as EDI direct participants. If both the payors and the payee's FIs are not direct participants but choose to offer EDI payment services to their clients, they will send the payment information to a direct participant that has agreed to exchange EDI payments for them. Now let's take a look at how the CPA uses EDI for the processing of electronic bill payment remittances. The exchange of an EDI bill payment transaction begins when a CCIN biller issues an invoice and the consumer pays the bill via their FI, either in branch with the teller at a bank machine or via their FI's web or telephone banking service. Let's assume that this consumer has chosen to pay the bill via their FI's online banking service. The consumer's FI debits the consumer's account for the amount of the payment and sends an EDI bill payment remittance, which is transmitted over the CSN to the biller's FI. The biller's FI credits the biller's account for the amount of the payment made by the consumer and sends the remittance information to the biller. The biller then reconciles the incoming information with its database and updates its client account records accordingly, in time for the next payment cycle. Typically, the payor's FI will bundle all of the electronic remittances destined for the same biller into one EDI payment file that contains a breakdown of all consumer payments received that day. The payee's FI will deposit the funds into the biller's account, as per their agreement, and provide the corresponding remittance information separately for reconciliation purposes. That said, EDI is not a batch system, which means that transactions can be exchanged on an individual basis. So EDI files are exchanged throughout each business day until 5 p.m. Ottawa time, the final cutoff time for EDI exchanges. So, with all these EDI and other payment files being exchanged via the CSN each day, how do FIs keep track of the amounts they owe each other? That's where the ACSS comes into play. Direct clearers that are owed funds by other direct clearers make entries into the ACSS for the amount they are owed. Volume and value data is entered into the ACSS for all payment types. For bill payment remittances, each participating direct clearer tracks the volume and value of EDI bill payment remittances they receive in each exchange and a separate record of total volume and value for paper-based remittances. The total volume and value for each type of remittance received is entered into the ACSS by each participating direct clearer. In the case of an EDI bill payment remittance from customer of direct clearer A to the biller that banks at direct clearer B, it's direct clearer B that is owed funds by direct clearer A. Direct clearer B would make the ACSS entry to indicate the amount that direct clearer A owes them for providing the funds to the biller of direct clearer B. Obviously, we've simplified this quite a bit to give you an idea of how the ACSS functions. The CPA doesn't see or touch individual transactions. The volumes and values that the direct clearers enter into the ACSS are aggregate numbers, not individual payments, but you get the idea. So, we know that each time payment items are exchanged between direct clearers, data is entered into the ACSS to track the total volume and value of items. So, we know that aggregate volume and value data is entered into ACSS streams by each direct clearer that is owed funds as a result of payment exchanges. What happens next in the clearing? A process called netting. At the end of the daily exchange process, ACSS entries, including those for POS and online payments, are used to determine the net positions of the direct clearers. Netting is the process of establishing the amount owed to each FI by adjusting the mutual claims of each one on the other. The ACSS determines the amounts owing between each pair of direct clearers, a process known as bilateral netting. The system also determines the net positions of each FI overall. This process is referred to as multilateral netting. The multilateral net position of each direct clearer is called its clearing balance. Settlement at the Bank of Canada is the next and final step in the clearing and settlement process. It takes place following the end of an ACSS cycle around 11 a.m. each business day. Direct clearers that have a negative ACSS clearing balance are required to send payments for that amount to the Bank of Canada using the CPA's Large Value Transfer System, or LVTS. When the Bank of Canada receives a settlement payment from a direct clearer, it updates that direct clearer's ACSS settlement account records to reflect the payment. Direct clearers with a positive ACSS clearing balance can choose to maintain a positive balance in their ACSS settlement account or reduce the balance by receiving an offsetting LVTS payment from the Bank of Canada. Settlement on the books of the Bank of Canada is final or irrevocable in payment speak. In turn, indirect clearers settle with their respective clearing agents through accounts they maintain with them. For more detailed information on the CPA's role in clearing and settlement, check out our Intro to the CPA session. There are several CPA rules and standards that apply to EDI and to bill payment remittances. They are all available on the CPA website. Rule E3 sets out general rules for the exchange of EDI payments between member FIs, as well as the technical specifications for CPA-supported EDI file formats. EDI is a huge application with many transaction types and segments that can be used for various industries. Standard 006 provides guidance on technical requirements for the microencoding of CCINs and other routing information required on paper remittances, as well as providing guidance on additional requirements such as paper thickness, size, etc. Rule H6 sets out rules for the exchange of bill payment remittances between member FIs, including the Corporate Creditor Identification Number Framework, general requirements for the processing of bill payment remittances, and certain additional requirements for the processing of both electronic and paper-based remittances. The originating FI validates each EDI file prior to transmission. If an error is detected in an EDI file during validation because of incorrect routing information, for example, the payment will be rejected. If it is not possible for the receiving FI to post the funds to the recipient's account for reasons such as account closed, the receiving FI is required to return the transaction to the originating FI. The return must be initiated within 1 business day after the transaction's value date or the exchange date, whichever is later. If an error is discovered in an individual EDI transaction within an EDI file after transmission, but prior to the delivery of funds, CPA rules allow for an originating FI to send a priority payment cancellation request to the receiving direct participant. It may be possible for the receiving FI to cancel the transaction. If it is not possible, the receiving FI will notify the originating direct participant and provide them with a reason why the cancellation could not be effected. An entire file can only be canceled if the receiving direct participant approves the request and can readily extract all relevant transactions from its system. Once the time frame for cancellation is passed and the funds have been made available to the recipient, the EDI payment is final and irrevocable. However, individual financial institutions may opt to offer other avenues for the correction of bill payment errors outside of the EDI framework. The CPA owns, operates, and maintains the automated clearing settlement system, including the mainframe and connections at all direct clearers. We also train and support member financial institution staff in the use of the system and provide education on the applicable rules and standards. In addition to supporting the validation of EDI routing information through maintenance of the financial institution's file, FIF, assigning corporate creditor identification numbers, CCINs, and maintaining the CCIN database, the CPA maintains the CPA Services Network over which EDI files are transmitted. The CPA also plays active roles in committee support and incident management. Sometimes, CPA members will experience emergency situations that may prevent them from being able to meet the deadline for the exchange of EDI files. And in these cases, they will reach out to the CPA to facilitate an announcement to other members to let them know that they are having a problem and may not be able to meet the deadline. For example, an FI may experience technical difficulties that prevent it from processing payments on time. Sometimes the problems are resolved before the deadline, in which case, all is well. But other times, a financial institution might not be able to meet its payment processing deadline, in which case the CPA can facilitate an extension to the deadline for that FI and coordinate with other members to accommodate the extension. We hope you've enjoyed this session and that you learned a few things you didn't know about EDI and the CPA framework for bill payments. If you'd like to learn more about EDI, bill payment remittances, or the CCIN, please visit the CPA website Act and Rules section, where you can find the ACSS rules and standards we discussed today. The answers for many frequently asked questions are also available in the FAQ section of the CPA website. If you have a question we haven't addressed, please feel free to contact us, and we'll be happy to provide you with the information you need. You can reach us by email at info@cdnpay.ca or by phone at 613-238-4173.